here standing in front of you. Neil Clemmy is an agent with State Farm Insurance. Some of you may have seen his picture. You have one billboard in town, right? So he is a graduate of our program, the Financial Counseling and Planning. You're a 97 graduate?
Yes.
97 graduate. And I still remember him as a student. And so we both have aged, obviously.
You more than me.
So it's a pleasure to have him. And I think Neil's, the advantage of having him is that he has seen the insurance business from a number of different angles. So even though he runs an agency in town right now, he started his life as an insurance adjuster, which is something we've talked about. Those insurance detective people that do insurance detective work to figure out when the claimant says XYZ happened, your job as an adjuster is to go and say, no, XYZ didn't happen, something else happened, this is what we find. So you have to be like a detective. And so he's done that work as well. So I think he can address a number of questions from different angles. So I'm hoping you guys have a lot of questions to ask him. Put it on the hot seat, and we'll ask him and go from there. So hopefully you guys will come prepared. And so it's all up to you.
Hi, like Sagato said, I'm Neil Clemmy. I graduated from Purdue in '97 from financial planning. Sagato was pretty new back then. But my wife is also a Purdue grad. She graduated pharmacy in 2000, I believe. We've got 3 kids, 9, 7, and 4. My office, my State Farm office, did anyone here a client? All right, 2, all right, nice. My State Farm office is right on campus, just off of Robinson Street, off Salisbury. So when I graduated from Purdue in '97, I became an auto claim adjuster with State Farm right out of school. Has anyone here had an auto accident? Oh, not bad, not as many as usual. So the person who decided who is at fault, so sometimes when you're in an accident, it's not always determined whose fault it is, or people think they know whose fault it is. It doesn't mean they're actually right on whose fault it is. I was the person who decided whose fault it was. Obviously, the other person in the accident would have an assigned adjuster. They would decide who's at fault, and most times adjusters agree and everything goes smoothly. If something isn't agreed upon, as Sagato said, the adjusters do the detective work to try to figure out what happened and who's at fault and who owes what. And then if they still don't agree, then that usually goes to arbitration, and an arbitrator decides who's at fault and what happens and who pays what. So I did that job for a couple years in auto claims. So that includes paying medical bills and paying lost wages for someone who's off work, paying repair bills, making sure the estimate for the car is correct, all that good stuff. How many in here of you buy your own insurance versus how many of you in here on your parents, where your parents pay for your car insurance?
Which one is it?
Okay, sorry. Parents that pay, the more fun of the two.
Okay,
all right,
everybody.
Majority. How many of you in here are juniors and seniors? So how many of you in here, parents are going to cut you off in 1 or 2 years? All right. So after I give my little bio, which will be boring, we'll open up for questions and answers. Anything you want to ask, I guess it's called hot seat. So any questions you want to know about insurance, be it auto, home, renters, business, life, health, because your parents have handled your health insurance for you, ask anything you want and I'll walk you through. And if it's something a little more detailed than class, I've got business cards. You can call, set a time, we'll talk over the phone. Whatever. If it's something you want to ask in front of the group, well, I guess now it's more private anyway. So, but yeah, we can do it after class as well, or set a time at my office. How many of you here are local or want to stay local after you graduate? A few? Okay. All right. Well, the reason I ask is I've got 3 full-time Purdue grads that work for me. So I've hired Purdue grads. So I got cards for that. If you're interested in talking about employment with State Farm or the insurance industry in general, I'm more than willing to talk to you about that as well after class. But anyway, after I finished as a claim adjuster, I put in my hat to become an agent, and I got an agency here in West Lafayette. So I started an agency in 2001. State Farm sells auto, home, life, health, bank, mutual fund, just about any insurance and financial service product. So that's why I have a staff of 5 full-timers, so I can't do all the sales and servicing and helping people with claims all myself. So my office staff helps quite a bit. Since '01, I started with just 2 employees, and now I'm up to 5, and hopefully we continue to grow. Love the insurance industry. It's not just agency side. It's a great industry to be in, very secure industry. Not the highest paying route of college, but there's a lot of insurance jobs out there. And I know a lot of you guys are graduating soon, so it's a nice career to look into. Go ahead, Scott. If you got a question you want me to start with?
Yeah, well, why don't we, we'll still, so when you talk about, claims adjuster, you mentioned something about deciding who's at fault. So you normally have a police report, right? I mean, it comes with it. So how important is the police report? As an adjuster, you override the police report? If the police report says something happened, this person's at fault or whatever, can the adjuster say, no, we don't agree with that?
Yeah, that's, the police report doesn't determine who's at fault. It's an information gathering tool. Unless the police officer was there and saw what happened, then what they write down is just hearsay on how the accident happened. So a witness to an accident that's on the police report, that's the person who really can tell you what happened in an accident. But the police report, you want one if it's any kind of substantial accident. That way it's a place where all parties involved can see all the information of someone's driver's license number, date of birth, way to get in contact with them. So if you're in an accident, the rule of thumb is to fill out a police report or have the police show up. Now, you're in downtown Chicago, you back into someone, the police aren't going to show up. So just an exchange of information is sufficient. But the police report is not the determining factor. The claims adjusters of each party, they determine who's at fault. And then if they agree with each other, then they proceed from there. If they don't, then each party involved uses their own insurance policy to pay for their damages and lost wages or whatever they would have. And then they go after the other party to try to prove that they're at fault.
So what should people do when they're in an accident? So can you walk us through the appropriate steps to follow when somebody rear-ends you or you rear-end somebody?
If you're in an accident and you're not in a metropolitan area where the police aren't going to come for something minor, you call the police and let the police come and fill out a full police report. Then you call your insurance agent from there and have that, depending on what the situation is, they'll walk you through how the claims process works, because it's different based on if you're at fault, if you're not at fault, if you have what coverages you have, et cetera, et cetera. So basically get a police report if at all possible, and then call your insurance agent and start the process.
What if the police report isn't possible? Then what do you do? Because obviously each side will have a different version of it.
Yeah, if the police report isn't possible, then exchange information so you get the other driver's information, and if they don't own the car, the information of the person that owns the car, because that's prevalent in how stuff can be paid, and then call your insurance agent from there to potentially file a claim.
So you should have your insurance agent's number on the speed dial, is what you're saying?
Yeah, if you're accident prone, definitely. But you definitely want to know who your insurance agent is. And if you're at a company that doesn't have an agent, then you need to know an 800 number to call to be on hold to wait for them to pick up the phone.
Okay. So how does this, a lot of you raised your hand when you talked about auto insurance accidents. So what did you guys do? I mean, what was the whole, Did
anyone have an unfavorable experience when they had a claim, auto accident that you were in?
Yes, you want?
Oh yeah. We didn't file a police report, so we had to keep going back and forth, and the guy ended up not having insurance.
Okay, when folks don't have insurance, that if you have the right coverage, that isn't too bad. The problem is proving that the person doesn't have insurance, because often people who don't have insurance aren't the easiest to track down or deal with. So if you don't have the appropriate coverage, then that falls onto you versus your insurance company. If you have the appropriate coverage and your insurance company does that for you and tracks them down. But if you don't have the appropriate coverage to pay for your damages when the person is uninsured, have you ever heard the old saying, you can't get blood out of a turnip? So generally speaking, someone without insurance doesn't have the money to pay you for your loss. So having the proper insurance coverage is a good thing to have when you run into an accident like that. And you guys have talked about liability versus other coverages?
Yes.
Okay. Once you get out on your own and you start buying your own insurance, regardless of what your parents' current insurance policy is, the thing you want to make sure that you do is buy high liability limits. Most people that come to the office, especially those who buy stuff online without any guidance from like Geico or Progressive, and I'm not picking on Geico and Progressive, they write business that we wouldn't write, so they're out there for a reason. We won't write higher risk drivers, and many companies won't. But folks who buy on their own without help of an agent or an agent staff tend to come in with low limits and low deductibles, which equals often low premiums. But you want high liability limits. Liability is if you're at fault in an accident, what the insurance company will pay to the injured parties before you start paying out of your own checking account. If you get in an accident and you're at fault and you're a soon-to-be college grad or a fresh college grad and someone is hurt bad, they'll probably have an attorney. And when the attorney gets done, they're not going to stop it. If your limits are $50,000 and the person has $100,000 in lost wages and pain and suffering, the attorney will go after you for garnished wages on future income. So make sure you buy high liability limits, and if that's too expensive to do, then buy high deductible on your car, meaning if you're at fault, then you're going to pay more out of pocket to fix your car versus buying low limits on liability and low deductibles. You can afford $500 extra dollars or $1,000 extra dollars, but it's hard to afford a couple $100,000 extra if you have a bad accident and you're at fault. Yes?
So does high deductible mean high liability?
Okay, but liability has no deductible on auto insurance. So liability is if you run into me and I got my 3 kids and wife in there and we're all hurt, liability is how much your policy will pay in total to damages to our injuries and to our car. Then the deductible portion comes into paying for your car. So like your deductible on your car might be $250 or $500. Well, I mean, you want a $500 collision deductible most likely, or even $1,000 to help get premium down. But unfortunately, people try to buy a $250 deductible and only buy $50,000 liability. So they're carrying low liability and low deductible when they should have high liability and a high deductible. Good question.
Look at the stuff in the back.
What can you do if your car isn't fixed properly? All right, that happens. Luckily in our town, almost every body shop is a good body shop, so we don't have as many of these problems. But back when I handled claims, I worked in East Chicago, and the body shops weren't all quite as reputable as they are around here. So if you're with certain insurance companies, have preferred vendors. By that, almost all insurance companies have preferred vendors. With us, almost every shop in town is a preferred vendor. So you can pick who you want to go to have your car repaired. But if you go to a shop that your company recommends, then that shop is going to guarantee that it'll work. So Scott wrecks his car, he goes to his local dealer that he buys his cars from. That dealer is a preferred vendor. Sagato has a problem with the repairs. He calls me, I call them. He takes the car back in, and they should fix it to his specifications because they are an approved vendor and they don't want to lose State Farm's business. So that's general. Now, if you go to some random or your uncle's friend's shop and it's not on an approved vendor list, then you're on your own getting your car fixed properly if they don't fix it right. So if you stick with someone that your agency or company recommends, it's generally because they have an agreement with them that they're going to do it right to begin with. Same on a homeowner's claim. You have a claim on your homeowners, which I'm sure not many of you are homeowners yet, and you use a preferred vendor type, and every company calls it different, but it's basically a preferred vendor list. They're going to guarantee their work and get things done the right way, because if they don't, they won't get jobs anymore, and they make all their money off of us, so they want the business.
So there's a question about somebody's mother telling them about the insurance agency can drop you if you make the correct payments. Is that true?
Now, agency, I guess you could say yes. If I just didn't like you as a customer, I could tell you to go buy it elsewhere because we're not getting along and I don't want you. Just like you could tell me you don't like me, don't want to buy insurance from me. But from State Farm, if you're eligible and you're insured with State Farm through my office, I can't call State Farm and tell you to cancel you. They'll say why and say because I don't like the guy, and they'll say no. So agency, yes. Company, no. I guess maybe there are companies that could, but my company won't drop you for no reason. That isn't. They have to file rates and how people are eligible with the state of Indiana. It's illegal for a company to do that in Indiana, but an agency could tell you to beat it. We don't want you. So kind of. Okay, let me see. What is the best to do?
Best thing to do.
The best thing to do with a hit and run dealing with insurance? Hit and run, you see that one, I hate to say all the time, but people like to think, you guys talked about comp and collision, correct? Comp is comprehensive losses and collision losses on your car. People like to think that hit and runs mean it's going to be comprehensive, so they always, I don't want to say they're lying, but they feel like they were a hit and run in a parking lot. No, they just noticed the damage, they don't know what it was from. Well, that is actually a collision loss. So in general, people's collision deductibles are higher than comp, so people always hope it's comp because they get to pay less money that way. But if you have a legitimate hit and run accident, all you can do is file a police report, hope the police actually look into it and find them, and if they do, then it would go on the party's insurance that hit you. If they don't find them, it's collision loss on you. So you're paying a collision loss if you don't find the party who hit you.
Even though your car was at a standstill when this happened,
Mm-hmm.
obviously.
Yeah, it's still
It's not
covered.
collision.
It's just a collision,
Not comprehensive.
not comprehensive.
Because what we've talked about in class is that usually when you're stationary, it's under, for the most part, under comprehensive.
Usually is correct, but not if your car, say you're walking out of the grocery store, you see a shopping cart blowing across the parking lot, and you're just not quite fast enough to get there to stop it and it smashes your car, that's collision, not comp. So your car was stationary, but it's still collision. You're walking out of this classroom, walking to your car, you see some idiot back in your car and take off, you don't get his license plate number, that's collision. Otherwise, everyone would say that's what happened to be comp. So those are collision losses. Let's see. That's a good one. How much of your claims process is being replaced by insurance apps for your phone? Is this effective? Yeah, that is an effective method to filing a claim because it gets the claim turned in quickly. But one thing that I don't like about the process is this. One way to get dropped by insurance companies is turning in claims because most people don't have claims. So frequency is, believe it or not, just as bad or worse than severity. By that I mean how often you turn in a claim is just as bad or worse than how big your claim is when you turn one in. So what these apps and 800 numbers at companies have done is allowed people who don't know much, which most people don't know much about insurance, to turn in claims on stuff that, for one, isn't even covered, or two, they should just pay out of pocket because it's not worth turning in, and then they get canceled because they haven't talked to me or my staff for us to tell them, you do not want to turn that in. It's a waste of your time and money, you're going to get canceled, and then you're going to be paying 5 times the price for insurance because you just got canceled. So on an easy, you got rear-ended, you've got $10,000 damage, hit file a claim, it's great. But on homeowners, it's a nightmare because half the people that call the homeowner's claim really don't even have a claim because it's not a covered loss. They think it could be, and we understand why they think it could be, but it just isn't. So they turn stuff in that gets zero paid, then they have an actual claim, then they get canceled because they had 2 claims in a year when one wasn't even a claim. So I don't like that. I'd rather spend the time and talk to the person and coach them on how to do it the right way versus them just assuming everything's covered and turning it in.
So that's a good point that you raised. So what would you tell the class about, what is a good rule of thumb about?
Never file a claim without talking to your insurance agent, ever.
That's one. But in terms of the severity of the damage versus when you should file, when it makes sense to file a claim versus not.
And that's a great question, but it's almost it's impossible to answer because every situation is different. So you're a brand new and buying your own insurance. You have only a renter's policy with us. You're a little higher risk because you're younger. You're getting a claim. Your claim is X number of dollars. Sagato's been insured with State Farm for 25 years, has 10 policies, hasn't had a claim in 20 years. It won't affect him as much to turn one in. He could get it free because we're waiving a loss. So every company, you hear Allstate does the best job of advertising their claim forgiveness program. We've offered that for basically forever. So some person could be up for claim forgiveness in 1 more month and wait on turning the claim in. So you have to talk to your agent and see what your specific situation is to know if you should turn a claim in or not.
Well, I was trying, okay, so let me give you a hypothetical. So let's say you're a $1,000 deductible and you have a $1,300 or $1,500 damage.
Don't turn it in.
Right.
Yeah.
So $2,000 damage.
Then it depends on, and I say don't turn it in. I mean, not all of our clients are well-to-do. Some folks, $300 is a lot of money. So we advise them, you're in your best interest not to turn this in. But if you can't afford to not turn it in, we will turn it in for you.
So if it's a little bit over your deductible, don't turn it in.
Absolutely, do not turn it in if it's just over your deductible. And there's situations where, someone uses their handy dandy app on statefarm.com, files a claim, the claim goes through, we pay it. They got, a $1,300 loss in their house. They got $300 because their deductible is $1,000. They just lost a $400 a year claim-free discount for 3 years, so it cost them $1,000 almost to turn the claim in. And had they called me, they wouldn't have turned the claim in, but they used their app. So it can actually cost you money with the same company to turn a claim in if the claim's small enough.
So you're saying that if it's 2 claims a year, then it's a problem? Or
It depends. It can be,
that's
but
where how long you've been on them?
your time with the company, your insurance score, every company gives scoring, and I don't know the scoring. We joke it's like the Wizard of Oz. There's one guy at corporate, some dork at corporate behind a screen that puts this system together that no one knows the rates or the root. But they can't let us know because we could tell other people, then other companies would copy us. So, but we know general rules on if you do this, you will definitely get canceled. If you do this, you definitely will not. But there's some gray area where we just don't know.
So there are those questions, if your car gets keyed or the tire slash,
That is comprehensive.
that is comprehensive.
If you have comprehensive coverage, then it is covered by insurance. If you do not buy comprehensive, it would not be covered.
Okay, so there's one on top and then,
The one lecture I used to always, or not lecture, but the thing I always used to talk about was making sure you never go without health insurance. How many people in here buy their own health insurance currently? Okay. So for those of you that do not, obviously things have changed with the new healthcare laws, which I guess now they force you to buy it. If not, you get some nominal fine or something. But still, make sure you do not ever go without health insurance. So I don't know, they've changed the rules so much on when you're cut off from your parents based on when you can stay on there. But whenever you're running into a potential gap in coverage, if you're not eligible to buy it somewhere else, at that point, agencies like myself sell short-term gap health insurance. Make sure you don't go even a day without it. Not having health insurance can cause catastrophic losses of money for you. So that's a huge, just like not having high enough liability insurance. You've got to have health insurance, and you've got to make sure you have proper liability insurance. And the liability insurance includes renters. Right now, if you're under their blanket, their homeowner's insurance, if they're with most companies, would extend you for liability while you're living at Purdue. I don't know what companies' rules are, if you're on their taxes, if they're paying, whatever. But at some point when you're not with them, you need to have renter's insurance. Because renter's insurance, besides covering whatever amount of personal property you have for theft and fire and water loss, it gives you liability insurance. So you have a party at your apartment and someone trips and falls because they're drunk and smashes their head open, or you, heaven forbid, you burn the apartment complex down because you weren't being careful with candles. That can come back on to you because the landlord's policy does not cover you, it covers them. So landlord's policy, you cause a flood and it's your fault. You overflow the tub because you start filling it, you forget, and it floods the whole apartment or 2 below you. The landlord's insurance policy will go after you for money. If you have liability insurance from your renters, it'll cover it. So renter's insurance is super cheap. Once you get on your own or earlier, buy it. And those renter's insurance policies can be converted to homeowners down the road with like State Farm. And that time you had the renters counts towards your discounts for having homeowners. So it'll start saving you money quicker on your home when you eventually have one.
so that answers your tips about renter's insurance, right? Get it.
Yeah, buy. I mean, I think our minimum premium is like $120 a year so $10 a month, I think, gets you renter's insurance for $10,000 in coverage and a $300,000 liability, which is adequate for 95% of college students. So it's inexpensive.
If your car gets totaled, let me see that, and can no longer be driven in an accident, not your fault, is there a limit to the amount of days an insurance company will cost for rent to buy?
Yes, that's a depend. If it's not your fault, then, I mean, if it's not your fault and the other company's paying, there really, I don't think, is a legal limit on it. But they're gonna settle your total loss within so many days. It's not rocket science to figure out how much a car's worth. So they're gonna give you an offer on your car's worth $10,000. they're going to give you 1, 3, 5 more days of rental after they make you the offer, and then that's the end of it. So, and if your car isn't totaled, so your car's just in an accident, and the other company's paying because you're not at fault, then they base your rental car off how many days your car should be in the shop based on the shop hours. So rental car loss is kind of a scientific thing. They know if a body shop has 40 hours of work, that's more than 1 week worth of rental. They'll pay you, like two days or a day. Sorry, not 2 days. They'll divide the number of hours by 2 and give you that many days of rental or something.
So look at the next question. That's interesting.
I was in a fender bender when I was 16 where the other car backed out of a parking spot into me when I was driving. Their insurance got me for partial fault because I was looking the other way. What's the standard for partial fault? Indiana is, every state has different laws on contributory fault. Indiana, it can be 100%, 90, 10, any percentage, 50-50, whatever. Unless you're in an accident with like a cop or an ambulance, then they have to be 100% at fault to pay you. But say we get in an accident and it's 50-50, that's what it's determined, then we both use our own policy. If it's 60-40, then I owe you for 60%, and your company doesn't pay me for anything, then you pay the other 40 yourself.
But it seems to me like when somebody backs out and hits you, it should be their fault, right?
It should be. Parking lot accidents are the biggest pain in the butt of handling any auto claims. And then adding on to it is backing out of a spot is is the worst part of a parking lot accident. Because you've got, where did they hit? If I'm driving by and you're backing out, if you hit me in the front, then it's obviously, it could be either person's fault because should this person have stopped when they saw them? If you hit me in the back as I'm almost past, then how did you not see me? I'm almost all the way past you when you finally hit me. So there's a lot of variables in a backing out of a parking spot accident. Those are literally the worst to be a claim adjuster with. On the road, those accidents are much easier.
So what is the correct behavior in a parking lot situation?
Everyone drives too fast in a parking lot. Or they're not paying attention. So parking lot accidents are hard. I mean, it's funny how someone comes in and files a claim in a parking lot where they backed out of a spot. They've got a backup camera, a backup sensor, and they still manage to back into somebody. And I've almost done it too, so I'm not picking on. I mean, anyone can do it. So parking lot accidents are just the worst. Everyone's mad. No one's happy. Everyone thinks it's the other person's fault. It's a pain. It's a nightmare.
There's no clear rule on that.
It literally is the adjusters looking at where the damage is, the cars, the parking lot, is it by a turn, is it not?
So is it good to have the damage in front or the back of the car or the middle?
If you're the one going past,
yes.
You want it in the back because that means you are almost clear of them. If it's in the front of you, they're going to argue, should you not have stopped to let them back out? If it's corner, well, yeah, that can happen.
The guy didn't stop in time.
Yeah. Corner is arguably 50-50 because you backed in each other like that. So it's just a bad situation. And some of insurance, like, the app question on should I file it? Insurance is for catastrophes. So when I talk about large deductibles on auto, that applies to health insurance too. But there's always a number that if you have an agent or an agent that has a staff that will sit with you, there's almost always a number. Like if I look at Sagato's policy and my policy, and I have a $500 deductible, and I check $1,000 and then a $2,000, there's a point where it no longer becomes a cost savings to go any higher. So there are certain, like on health insurance, based on your age and your coverage, you may be better off with a $1,000 deductible. I may be better off with a $5,000 deductible because I have three kids and a wife home with me. That if you visit and review your insurance with your agent every year or two, you'll find ways that you could save money by adjusting things that have become outdated. But at the same time, you probably could use something else increased or something that you didn't have before. You get engaged, now you've got a $5,000 engagement ring. Well, your renter's policy is only going to cover $1,000 of that. But for $50 a year, you can insure it on a separate policy and have it fully insured. You get married and have a kid, and you both work, and you buy a house, and you can't make the mortgage payment without the other spouse. Now you both need life insurance on each other. and what you get at work will not be enough to cover what you need. So things are going to change where some things will need lowered down and some things may need raised. So a lot of times people come to the office and they'll leave with almost a net wash and premium because they bought something else, but we decreased other things to make it a net wash. So, you buy it once, I promise you that is not what you need forever. It's going to change up and down, and you're going to need products that you'll no longer need and add them, re-add them. So make it a habit to, I know insurance isn't fun, and no one wants to pay for it. I don't even want to pay for it, but I have to buy it. Make it a practice to meet with your insurance agent every year to 2 years to go over stuff to make sure you have what you need to have.
Do you have, there was one question, can you scroll down, about, what can college students do to reduce their premiums? So if you're in college.
All right, and that brings up another subject I like to talk about on it. College students can do a few things. Avoid, and this is anyone, but avoid tickets and accidents. That is a major factor in your rates down the road. Good student discount, so 3.0 every semester. I'm talking, some of this is industry-wide, but some is, some other company may be at 3.2. I don't know what the rules are, but with us, if you're at 3.0 or better, you qualify for a good student discount. So as a youthful driver, which is under the age of 25 and unmarried, if you have no tickets, no accidents, and you're getting good student discount, your rate gets down to where it's almost the same as someone who is over 25. So those things make a huge difference for college students, or for all youthful drivers. The next thing would be credit. I'm not saying get credit, I'm saying do not mess up your credit. State Farm does not use insurance or credit ratings, but almost every company in existence uses some type of credit criteria or scoring or whatever you want to call it to come up with your rate. Some companies, that's all they use. They don't care if you had 5 accidents, you had a DUI. If your credit is great, your rate is great. If your credit is horrible, you are ineligible. Some companies use partial, but your credit that you're either already helping or hurting will affect you your entire life. Future employers can look at it. Apartments that you want to rent, look at it. When you go to buy a car or buy a house, they're going to look at it. So what you do with your credit or have already done with your credit can either save you tens of thousands or cost you or save you hundreds and hundreds of thousands of dollars over your lifetime in insurance, interest rates, employment, everything. So besides protecting yourself liability-wise, I talked about, make sure that you are protecting yourself credit-wise. Check your credit scores. And this isn't a State Farm lecture. This is me being a finance guy. Check your credit scores. Make sure the information's correct. Pay your bills on time. Pay your credit cards on time. Don't delinquencies. Don't let, if you move out of your apartment complex and you owe your landlord $100 and he sends you to court, don't say, oh, well, screw that guy. Oh, he's going to send you to small claims court and get a judgment, and it could affect you down the road. Pay it. If it's your roommate that's a deadbeat, kick in and pay it for him because it can affect you. Absolutely. Yes?
Is it just speeding tickets that affect that, or do parking tickets?
Parking tickets do not affect, non-moving violations currently do not affect us. But claim-wise, like if you get there's people who can't afford to pay a tow bill, so they have tow coverage on their car, and then they use that. That could affect them from being eligible because they had one little $50 claim on their record. So fringe coverages on insurance policies used to be the in thing to do, and insurance companies cause their own problem. Insurance is here for catastrophes, but yet they offer all kinds of fringe coverages that then people are interested in then using because they're paying for. So if you can afford not to use your insurance, you're way better off to never ever use it. You need to have it, and hopefully you never use it. So you want to avoid fringe coverages like rental car, towing. You want liability, uninsured, comp, collision, underinsured. Those are the coverages you need to have on your car. If the car is worth having comp and collision on, it could be an old piece of junk and you don't need it on there.
So save your insurance for the big stuff, not the.
Insurance is for catastrophes. It is not a nickel and dime thing to have. You don't use it for small stuff. It's big stuff only. Health insurance is different. If you have health insurance, you use it every time you go see a physician or a doctor. So
Here's a funny one. This fact that you guys have competition from Talking Gecko, and then of course the guy.
I think the Mayhem guys are funniest. I laugh at every Mayhem commercial. It cracks me up. Those are good. How do I build my business and ensure you have the best rates? Okay, and property casualty. The nice thing about, I'll give you not that you care of how my life is, but the nice thing about being a State Farm agent is State Farm insures about 1 in every 4 households. Someone either has renters, home, auto, life, something of a State Farm policy nationwide. Nationwide is like 22%. Indiana, it's like 30%. 30% of every Indiana resident has something insured with State Farm. So you don't get that big by being uncompetitive. So our rates are always competitive. Now, if you called today and I was cheaper than where you are, tomorrow you call 10 places, someone else may be $1 cheaper. The next day, you can always find someone that'll beat your rate by a couple dollars, period. That's just, you can't always be the cheapest. But you don't get to be insured 22% of the country and be uncompetitive. We're as big as the next 2 combined and still bigger than them. So we are always competitive. And what most State Farm agents do to ensure that we keep growing and our agencies grow, because we don't determine the rates. State Farm determines the rates. So I don't pick my rate or Sagato's rate. State Farm tells us what our rates are. But we provide the service of not letting you turn in stupid claims that could get you canceled or your rates go up. We advise you what coverages to buy to make sure you're buying what you need instead of what you went on and tried to save 15% in 15 minutes. So that's how we ensure success, is by taking care of each client if they want to. You can still go online and buy from my office, get assigned to me, never come in, never call, never get a call from me. Tell me you put on do not solicit, we won't call you, and buy it that way through State Farm too. So we offer all the methods. We offer internet, call the company, click in, call in, walk in, whatever you want to do.
Does it cost anything to walk
Yeah.
in?
Nope. If you buy online and you buy in my zip code, there's only 2 of us that get assigned those because we meet all State Farm's rules to get assignments. Then you'd be assigned to one of the 2 of us, and I get paid less on it, but I don't. I've got 3,000 customers. I don't care. I get paid a little less on one I don't treat you any different than I treat someone who.
Consultation is free.
Absolutely. Yeah, you can come in the office, get a quote. We'll explain everything you've got, explain what you should have if you don't have what you should have. If you don't buy it, there's no charge. If you buy it, then I get paid when you buy it. So no consultation is no cost.
So, and you do discount double checks.
Oh yeah, every day, all day. Those commercials are funny. They're a little played now, but they are funny.
So could you explain what discount double check really means?
All right, so what that is I talked about every year or 18 months or 2 years, review what coverage you have with your insurance agent. Well, State Farm just came up with calling it a discount double check. We call it an insurance and financial review, to review all your stuff to make sure you're getting all the discounts. You haven't bought a motorcycle that you forgot to add or a trailer. You're now renting a house to live with your parents and you need renter's insurance and you forgot. So we're reviewing that you haven't added stuff or had life events that you need more coverage, and conversely that you haven't done things that make you eliminate coverage. So, when we do a review, literally every review we do, something gets changed. Sometimes the people leave paying less. Sometimes they leave having bought more. Sometimes it's just they bought something and dropped something. But there's no one goes 2, 3, 4 years. Well, I guess elderly people that don't ever do anything do. But most people in the age group of people in this room go 3 or 4 years without making changes that they need to adjust something on their insurance.
Do people need special coverage for computers in their homes or laptops?
Yes and no. Back, when I was your age, and make it sound like I'm ancient, but when I was at Purdue, literally, we had to go to the computer lab still. No one had computers in the room. We had those stupid fancy typewriters that had like discs in the side, word processors or something like. We had those back then. So when laptops came out after I graduated, they were really, really expensive. So back then, people needed to endorse them. But now a laptop's less than your deductible, so there's no reason to even endorse it. You just,
So how much does a thing have to be worth for you to consider a special rider on it or whatever?
on a renter's policy, the things that need endorsed for special riders are jewelry and furs, which no one has furs anymore. But jewelry, there's limits on jewelry. There's limits on business property, which doesn't affect many of you. There's limits on silverware, goldware, like fancy place settings. Art has a limit.
But you have to get those professionally evaluated. for
Based
that.
on the price, yes. So there's
You
certain.
can't just claim. You can't
Yeah.
just claim that it costs.
Yeah, there's certain dollar amounts based on the article that you would need to have an appraisal versus just going off what you say it's worth. And like photographers have cameras, like high dollar cameras that they want to endorse on riders. Businesses are big on riders. Business policies come with certain set coverages, and say I've got a contractor insured that's got a Bobcat and a skid steer and a bunch of mowers and backhoes. They need to endorse all those for off-premise coverage. So, but most people, the general public, fall under, like college graduates would fall under, most of them need to endorse jewelry because most of them end up buying a significant other, a nice piece of jewelry that is above what their home would cover. Otherwise, most floaters aren't needed anymore, hardly.
So what about this question about no-fault insurance, and how does that compare cost-wise to a state like Indiana?
No fault states always cost more. I'll miss some of them. Michigan is no fault. I think Kentucky is. Florida definitely is. So what no fault means is
So if you go into Michigan,
your coverage changes
and
the Michigan
somebody
coverage.
from Michigan, then whose policy or whose state takes precedence?
The state the accident happens in takes precedence. So no fault means everyone uses their own policy. So you go into Michigan and you get rear-ended and you don't have collision coverage, then you don't have coverage to fix your vehicle because you don't have collision coverage even though that person rear-ended you. That makes sense? So in Indiana, if the person was at fault and they rear-ended you, theirs pays for you. In Michigan, everyone uses their own policy. So, and then Michigan has this crazy coverage called PIP. I don't even remember what it stands for, but it's unlimited medical coverage for injuries in an accident, which is one of the things that when you give people unlimited coverage, they tend to milk it. So that's one of the reasons why insurance in Michigan is so high. Auto insurance, that is. Which, I get paid commission, so if I was agent in Michigan, it wouldn't bother me if insurance premiums were high because I get paid more. But yeah, Michigan agents love it because their commissions, like a premium in Indiana, my average auto premium is $660 a year. My buddies in Michigan, their average premiums are $1,150 a year. So they get paid almost double me because we have the same commission rate.
What is it? Can you explain the gap insurance thing? Is there a minimum time limit?
What does gap? Okay, gap, yeah. On health insurance, so short-term, by gap insurance, we'll call it short-term health insurance. So it's written from as little as 30 days for as long as 6 months, and then you can renew it, keep on renewing it after 6 months. What was the question? Is there a
Minimum time limit for health?
minimum time limit is 30 days, but it is so inexpensive that on a 22, 25-year-old, that 30 days, if I had a guess, would be $60 to $100. It's cheap.
Okay. There's anything we want to see if there's one you want to.
I hit the big ones I like to talk about protecting your credit. For those of you that you're back to your credit, one more little thing. The more stuff that you accumulate in banks that you deal with over your lifetime, the more your credit helps you or costs you. So, make sure you're paying bills on time. I'm not suggesting you all run out and get a credit card. If you don't have any credit at all, and you don't have to buy it from me. I don't care where you buy it. But State Farm has a great student credit card that almost any college student's eligible for. I think the limit's 500 or 700. It's a low limit. Get a credit card. Use it wisely, obviously, and pay it off at the end of every month. Never let it revolve. That is a fast at building credit. If you've got a car, an older, a reasonably priced car that's in your parents' name for a loan, maybe have you get the loan and have them co-sign it so that's in your name and start paying it. That stuff builds up credit for when you get out of school to help buy a house faster, get a car, all sorts of help with insurance rates, all sorts of things. And anyone that is interested in internships, I know some majors require internships now at Purdue. I've hosted hundreds and hundreds of interns. We offer internships at the office. Some of it's unpaid, some of it's paid, depending on what you're willing to do. If you're setting appointments for the office, that portion's paid. If you just want to do office busy work or shadow, that's unpaid, that's just credits. I got business cards up here for people interested in that. Anyone interested in post-graduation employment, anyone interested in insurance quotes or whatever, or just wants to call a talk with me or my staff, feel free to grab business cards.
Any last minute advice, anything else other than what you said?
Now, anything else you want me to touch on?
This question's come up twice.
What's
Diminishing the double.
diminishing? Yeah, that's. I don't know if that's a good thing or I mean, I guess when it goes back to the insurance is really meant for catastrophes, that goes once again directly against that principle. And I think Nationwide offers that, if I remember from the commercials. And they're honestly, they're so small. I mean, I don't know that I've even written a person away or lost a person to them in my 14-year career. So they're the only company I think offers it, so I never run up against it.
All right, well, thank you.